Hello everyone, and welcome back to Explain the Charts, your go-to channel for deep diving into market data. Today is October 21st, 2025, and we are turning our full attention to Litecoin, or LTCUSD, which has been making major headlines. The dominant story circulating is the imminent decision on a spot Litecoin ETF, and the sentiment is overwhelmingly positive. Major asset managers like Canary Capital, Grayscale, and CoinShares have all made moves, with Bloomberg ETF analysts suggesting approval is largely a done deal. The excitement is palpable, with decentralized prediction markets like Polymarket showing the odds of approval as high as 95%. This has led to some incredible price predictions, with analysts targeting $160 by March and longer-term forecasts reaching as high as $400 or even a staggering $750. However, this optimism has been met with extreme volatility. Just about 10 days ago, on October 10th, Litecoin surged over 10%, breaking $130, only to suffer a massive crash of over 22% on the same day. This whiplash price action is a clear sign of the high-stakes battle being fought between bulls and bears. News reports also indicate that despite the crash, there was significant accumulation, with millions in LTC flowing out of exchanges, suggesting some large players are still bullish. So, let's dive into the charts to see how this dramatic news landscape is reflected in the price and identify what levels we need to be watching. Starting with the daily chart, we can see the broader story of Litecoin's journey over the past year. After a significant market-wide downturn, LTC found a strong bottom back in early August, dipping as low as the mid-$50s. From that low, it began a slow and steady recovery, building a solid base through late August and September in the $60 to $70 range. The real fireworks began in late September as the ETF narrative gained serious momentum, propelling the price out of its consolidation zone. This culminated in the explosive move up to nearly $136 on October 10th, a move that was heavily driven by ETF speculation. However, that same day saw a brutal rejection, with the price plummeting all the way down to close around $97. This created a massive upper wick on the daily candle, a classic sign of intense selling pressure overwhelming initial buying euphoria. Since that dramatic crash, the price has found its footing and has been in a recovery phase. This price action has carved out some very clear and critical levels for us to watch. The most immediate and crucial support level now sits around the $90 to $93 area, which is where the price bounced after the recent crash. A break below this level would be a significant bearish development, potentially opening the door to the next major support zone around $76. On the upside, the first major hurdle is the old support level around $102 to $105, which may now act as resistance. Above that, the psychological barrier of $130 and the recent high near $136 represent the primary resistance zone. A sustained break above $140, a level frequently mentioned in news reports, would signal a major bullish continuation. Let's zoom in on that period of extreme volatility in October to better understand the market dynamics. Here on the daily chart from October 1st, we can see the powerful rally from around $106 to the peak near $136. The candle on October 10th is incredibly telling. It represents a fierce battle. The enormous trading volume on that day was one of the highest we've seen in months, confirming the importance of this price action. The price was aggressively sold off from the highs, forming what looks like a shooting star pattern, which is typically a bearish reversal signal. However, the bears couldn't push the price much lower in the following days, as buyers stepped in to defend the low $90s. This successful defense and subsequent grind back up towards $100 shows significant underlying demand and resilience. It suggests that despite the violent rejection, many market participants view these lower prices as a buying opportunity, aligning with reports of accumulation. To understand how these big moves begin, we can look at older data on the hourly chart leading up to the October 1st surge. Here we can see the price coiling in a very tight consolidation range between $105 and $107 for nearly a full day. This period of low volatility and range-bound trading is often the prelude to an explosive breakout. The breakout occurred with a massive surge in volume, pushing the price decisively above the range and initiating the strong rally toward $115 and beyond. This is a classic example of a consolidation before continuation pattern that traders should always be on the lookout for. Now let's drill down to the 15-minute chart to analyze the most recent price action from the last day. Following the climb from the post-crash lows, Litecoin appears to be consolidating once again. We can see the price trading within a tight channel, establishing a short-term support level around the $93 mark and facing resistance near $95. The price has tested both the upper and lower bounds of this range multiple times over the past several hours. This type of sideways price action on low volume suggests the market is in a holding pattern, likely awaiting the next major news catalyst. For short-term traders, a high-volume breakout from this range could signal the next immediate direction. A move above $95 could indicate a push towards the next psychological level of $100. Conversely, a breakdown below $93 could lead to a retest of the critical support zone we identified earlier around $90. So, to bring everything together, the market is fundamentally driven by the powerful narrative of an imminent spot Litecoin ETF approval. This has created a decidedly bullish long-term sentiment, but also a very volatile short-term trading environment. Let's recap the most important price levels to watch. Key support is at the $90 to $93 zone. Holding this is crucial for the bullish structure to remain intact. Below that, $76 is the next significant support level to watch. Key resistance lies at the $102 to $105 area, followed by the major barrier at $130 to $136. The level that could unlock the next major leg up is a decisive break and hold above $140. Now for some potential scenarios. The bullish scenario, which I believe has a 70% probability given the overwhelming positive sentiment, involves an ETF approval or continued strong rumors. In this case, a break of $105 could quickly lead to a retest of the $130 highs, and if $140 is cleared, targets of $160 and $200 come into play for the medium term. The bearish scenario, with a 30% probability, could be triggered by an unexpected ETF delay, a denial, or a classic sell the news event where the price dumps after the approval is confirmed. A failure to hold the $90 support would be the first major warning sign, likely leading to a drop towards the $76 level. The primary things to watch for are any official announcements from the SEC and significant spikes in trading volume around these key levels. Also, keep an eye on the broader crypto market, as a major move in Bitcoin could easily influence Litecoin's direction. Thank you for joining me for this analysis of Litecoin here on Explain the Charts. I hope this breakdown of the news and the technicals helps you navigate this exciting market. Please remember, this video is for informational and educational purposes only and is not financial advice. Cryptocurrency markets are highly volatile, and you should always do your own research and consult with a professional before making any investment decisions. If you found this video helpful, please hit the like button, subscribe to the channel, and let me know your thoughts on LTC in the comments below.